I was recently listening to Cathie Wood's interview with MSNBC regarding her big ideas of 2022 and got curious to what the full paper said. With her fund down 57%, I was curious whether her fund is now a buy given her thoughts. As I finished the podcast, it seemed they had barely scratched the surface. So I pulled up the document and thought I would go over it with you. In this video, I will review her Big Ideas 2022 paper, explain why her fund is not the best way to exploit them, and offer a better solution to her fund. Let's dive into Cathie's Big Ideas 2022 presentation. Cathie starts off with, when has investing not been about the future? And this is true in theory, but later I will explain in practice why this has been Cathie's downfall as of late. Reviewing the table of contents here, I will give a brief overview of how I intend to cover this paper. This paper is 132 pages long, and I am not going to make you read it along with me, but instead, hit the high points to summarize the ideas presented. I am breaking this down into the following: a review of Cathie's thesis, artificial intelligence, digital consumers, crypto, genomics, and multi-omics, which I'll mostly be explaining why I'm skipping these, and robotics, which will include electric vehicles, autonomous ride-hail, autonomous logistics, 3D printing and robotics, and orbital aerospace. With this condensed understanding, let's review Cathie's thesis. Cathie's thesis. Cathie's thesis is that big ideas are converging between robotics, energy, storage, etc. They are all converging. I agree with this. They are all converging around artificial intelligence. This will be my key point. One needs to be very careful of Cathie's growth expectations. I am not sure about any of these, but I do know market leaders that will heavily benefit. Focusing on the cloud computing section, as we have seen with companies like Apple, Microsoft, Google, and Facebook, most of these winners take most of the market share. I expect this only to accelerate with artificial intelligence. Her ideas on robotics, I believe, are the most conservative relative to their outlier performance metrics. In conservative scenarios, robots may help us. In outlier scenarios, there is no reason to believe a humanoid robot couldn't surpass a human. This would be invaluable and reality-shattering. Regarding genomics, I think anything health-related is extremely difficult to invest in. Currently, big health companies treat medicine like venture capital work. A lot of small companies are purchased by large companies when their drugs look like they may become valuable. The investment may pay off or it may not. If the small company never takes off, it will go bankrupt or just be an underperforming investment. In this space, you can either take risky bets on small companies or a risky bet on a large company betting on small companies. This may change in the future, and I am discussing the future of the industry with industry experts. For now, I believe the easiest way to exploit this industry is to simply purchase the underlying artificial intelligence architecture the industry will be moving to build the next generation drugs. We now come to the artificial intelligence section, which is where I will have the most to say other than robotics. Here it says enabling humans to become superhuman. And I want to add, it allows robots to do the exact same thing, except without the physical limitations of the human body. AI model costs are declining. This is due to chips like NVIDIA's H100 coming out that are now dedicated to artificial intelligence, whereas before, the chips were being repurposed from graphics card chips. ARC forecasts that artificial intelligence will highly accelerate support roles, but that the more knowledge roles will not be as accelerated. I believe this to be a case of hubris. The people writing these articles don't want to believe that they themselves and people they perceive to be on their level could be replaced by artificial intelligence. I believe many companies could cut over 80% of their workforce with artificial intelligence in the long term quite easily. Even at the company I work for, it is easily possible to reduce the workforce by at least 20% with artificial intelligence acceleration, and that is being extremely conservative. In fact, during the writing of this script, the company I work for finally implemented artificial intelligence that will potentially eliminate 80% of the data entry roles. Here we come to the key point to be made here. Artificial intelligence software will boost demand for artificial intelligence hardware. We do not know which software company will take off. Using the company I work for, we could have gone with a few software solutions. We do know that from a hardware standpoint, artificial intelligence is driven by the chip, manufacturing that chip, and data storage. The companies that dominate these sectors are NVIDIA, AMD, Intel, Taiwanese Semiconductor Manufacturing Company, Seagate, and Western Digital. Artificial intelligence chips are mostly delivered by NVIDIA, with Intel and AMD being smaller players, and some of the big tech firms having their own proprietary chips that you can utilize as well. Manufacturing is provided by Intel and TSMC, with Intel being a newer player in providing services outside of itself, as previously, Intel only created chips for itself. Finally, data storage is a market cornered by Seagate and Western Digital. So as you can see, there are not many players currently that can deliver hardware for artificial intelligence at scale. With NVIDIA being a market leader with impressive revenue growth in their data center segment, it is easier to take the safe play and invest in the obvious hardware needed than guess which software innovation will take off. This approach may not secure the 28% compound growth rate that Cathie expects for the sector, but given the trajectory for growth shown here, these companies are certainly going to capture a lot of this growth, especially given the large moat and barriers to entry into this sector. Hence the heavy consolidation of companies into a few players. I expect an above-market return for holding a combination of these companies entered into at decent valuations. However, I am also willing to take a risk on Tesla, which some may see as a risky and overpriced stock, but given the growth trajectory and their lead in AI and robotics, I believe they have the capability to be the world's most valuable company by a far margin. They are tackling problems that have high earning potential if successful, and a number of times throughout this presentation, you will see Cathie mention the potential market sizes their solutions address. While their ventures may not be successful, when I have discounted the value of success in these fields compared to the probability of success, I still find Tesla to be undervalued, despite the seemingly overpriced value the company holds today. More on this on a future video. Next up, digital consumers. This isn't new. The digital economy on the internet has been very robust. We have been buying character and item skins for online games for a long time. For those unaware of what a skin is, it is a downloadable graphic or audio to modify a character you are playing online. Online games have been hangout spots for a long time, so there really isn't anything new other than the growing notice of the mainstream to this phenomenon. Next up, we have crypto. I'll be largely skipping over this space due to the speculative nature of crypto. This is also due to my own investment philosophy of only investing in companies, as that allows me to have a claim on future cash flows of the company, whereas a currency does not. I have tried to distill this down concisely, but given the emotional nature of the subject, it would take me a full video to address everyone's concerns adequately. So I will not be diving into this subject and largely skipping over it. There are just better risk to reward opportunities in my opinion, and I will leave it at that. With that said, Cathie does mention the banking sector, and I do agree that digital banks are the future. Traditional banks are just too expensive, and a ground-up digital bank has a huge advantage. Next up, Cathie goes over genomics and microgenomics. I'm going to largely skip over these sections as well. This space works a lot like venture capital. Big companies act as investors, and when small companies have a promising drug, a big company will purchase them and push the drug across the finish line, or buy the finished drug and scale it. Picking the right small company is hard, and picking a big company to pick the right small company compounds the issue. However, all of these companies will be driven by artificial intelligence, and thus, going back to our overarching theme, it's easier to invest in artificial intelligence than to pick which companies will be the winners in this specific sector. We now come to the final section of the presentation, robotics. This starts off with electric vehicles, but in reality, I consider all of these final sections to be robotics. Tesla dominates the EV and robotics sector. They are proof of the efficiencies that can be derived through robotics. Looking at Tesla's most recent quarter of performance, we can see they have the highest operating margin out of all EV companies. This is driven by robotics. I thought it was interesting to note the scale of this graph and how, if one isn't paying attention, you would have not understood how fast the charging rate is improving. With this table, how do we judge performance? While many may say Tesla has the performance crown due to range, we have Rivian, Lucid, the Hummer EV, and the Ford Lightning, each which could have a performance crown depending on the metric chosen. When it comes to EVs taking over in sales, this I believe is still driven by early adopters. Unless EVs continue to improve in range and price, these numbers won't continue to be as impressive. Looking at the autonomous nature of EVs, this will dramatically change how transportation acts in the future. Cathie, however, has overpriced how much people are willing to pay for ride-hailing. At $2 per mile and 8,000 miles traveled, this would be a $16,000 expense. Far more than Americans can pay for just transportation. Dr. Ian Cutress, a former writer for AnandTech.com, had an interview with the CEO of Mobileye. He confirmed that Americans would be willing to pay up to 10% extra of the vehicle cost for autonomous driving. I believe this to be quite low, but we know $16,000 a year would be too extreme of a cost. Moving forward, the next point Cathie makes is on the market size. Here, I think it's important to note that artificial intelligence is an economies of scale game. Whether it's Google, TikTok, or Facebook, the more scale you have, the harder it is for others to compete against you. This is due to having more data to feed your algorithm to improve it. This becomes a vicious cycle as the market leader only becomes more dominant and has more funds to invest than smaller players. Looking at air taxis, I believe this will be a regulatory nightmare and not something to focus on. Next up, Cathie covers the logistic elements of autonomous EVs. This is a similar problem to ride-hail, and it will be solved simultaneously. Grocery delivery could be a large space to capture. However, getting people to pay for time saved is hard, especially when the average person does not see going to the grocery store as unpaid wages. Most people's time isn't valuable. I believe Cathie is overestimating how much people will pay for this. Similar to before, I don't believe drones will take off this decade. Next, we go into the meat of the robotics section. I believe this will be a hugely important part of the artificial intelligence revolution. Hence, why I labeled this whole section robotics. I expect artificial intelligence to shape robotics manufacturing and for this field to be largely automated. Due to the pandemic, I believe the labor crisis has created a crisis for management. Management will not want to be exposed to the lack of labor supply again. This will speed up the adoption of robotics. 3D printing will allow for just-in-time manufacturing to increase. We have recently worried about not having inventory for certain parts due to manufacturing shortages. This will make the supply chain footprint much smaller and reduce shipping costs. I am curious to see how this will affect unauthorized copies. It will be easier than ever to clone products. This may actually be an incentive for NFTs, as physical goods become just as easy to clone as virtual goods. The blockchain will be the only way to create unique scarcity. Automation has moved in lockstep with job growth. However, once we can automate the human body, I believe this trend will completely stop. Tesla and Boston Dynamics are already working on this. Robotics is the one space where I believe Cathie may have underestimated market potential. The final subject Cathie covers is space, which I have lumped into robotics. SpaceX is the clear market leader here, and they will continue to decrease the cost of launching satellites into space. The only thing in this section that piqued my interest was hypersonic travel. A number of companies are working in this space, but there have been sound pollution concerns, as there is a loud sonic boom that occurs when aircraft enter hypersonic flight. I am again unsure of the value Cathie puts on this type of travel, but I do believe the desire to travel will not dissipate until virtual reality becomes more indistinguishable from real life. This concludes Cathie's big ideas of 2022. I was not impressed with this paper given Cathie's holdings and her recent fund performance. I believe she has a habitual practice of paying too much for growth. I will utilize the company's skills as an example. This was a gaming company Cathie invested in that had terrible games attached to it. Sure, it had near-term growth, but was this growth sustainable? Most noteworthy was the premium she ascribed to this company. At a time when this company had not even had an annual revenue of approximately $250 million, she thought it was prudent to buy the stock at a $10 billion valuation. This is an approximate price to sales ratio of 40, which is huge. For context, Tesla has a price to sales ratio of about 20 right now. Skills was around $17 per share at the time of her purchase. Reviewing this graph from cathiesart.com, which shows her fund activity, we can see that she purchased at a high point. Today, the company sits at below $2 per share and a market cap well under $1 billion. Due to her inability to acquire companies at a reasonable valuation, I do not have faith in her ability to capitalize on her investment thesis. However, I do believe we can take her ideas and profit off of the tailwinds of artificial intelligence and robotics. The companies I have identified to take advantage of the artificial intelligence revolution in no particular order are AMD, NVIDIA, Intel, TSMC, Seagate, Western Digital, and Tesla. AMD and NVIDIA will benefit from designing artificial intelligence semiconductors. Intel will benefit from designing and manufacturing semiconductors. TSMC will also benefit from manufacturing semiconductors. Meanwhile, Seagate and Western Digital will benefit from the growth in hard drive space needed to store all of the data generated from artificial intelligence. Finally, Tesla, as a leader in artificial intelligence and robots, will be a huge beneficiary. While I will be going over each of these companies in future videos to look for good entry points for their stock, I believe these are the companies to watch, as they are huge beneficiaries of artificial intelligence and their markets have few major players. Looking at the table provided here, we can see there are at most 3 large-scale competitors in each field related to artificial intelligence. With the playing field being so small, I do not see benefit in trying to hit a home run by betting on pre-profit companies that Cathie has identified. Rather, there are safer profits to be made with more established beneficiaries of artificial intelligence. For this reason, combined with Cathie's tendency to overpay for a stock, I am avoiding Cathie's ARKK fund and am instead focusing on these key beneficiaries of artificial intelligence. Keep an eye out for future analysis of AMD, NVIDIA, Intel, TSMC, Seagate, Western Digital, and Tesla. If this was useful to you, please leave a like and a comment, or just a comment about what you hated. Thanks for watching. Bye.